out to the halftime report presented by Tackle Trading. It is August 16th, 2019. We are here on a Friday, ending out a pretty interesting week. A lot of movement, both up, down throughout the entire week. Just crazy markets. I have myself, Coach Gino, and Coach Mark, but I'm not even going to bother how Mark's doing. And Gino's the way to get coffee. So I'm just going to start talking about the market.
There is a young man taking control right there. I like it.
Oh, so really, I'll be honest. When I see this, like I went into the market with a slightly bearish bias, and I'm still slightly bearish, but I'm just more neutral, just because you can tell that there's some political unrest that doesn't want to let this market go down at all. You have different institutions trying to step in, push things one way or the other, trade rumors, all these things going on like that. So I'm neutral with slight bearish lean, but I haven't done much of anything directionally. I've been more cash flow the past week. What about you guys?
Well, listen, that's the trade war playbook, isn't it? I don't know how many times I have to say it, and it's one of those things that you hear someone say something and they pound the table, and then eventually, after enough evidence, they start believing it themselves. It is during these time periods where the trade war has been front and center. Those people that have heard me teach or speak anytime this year, especially the last 3 months, knows what I'm about to say. It's hard to trust your eyes on big price movement candles. We've seen this over and over and over again. What you need to do is trust the range. And if you eliminated those moving average, which is sacrilege to me, since I'm a huge, since I'm a huge moving average guy.
Let me see what I got here for you. No moving averages. I should have a chart with none. I guess I don't.
But just if you go up to studies, you can remove
I'll pull them off for you.
No, there's a button. There's a button there. In fact, let's do a think or swim lesson here. Go back up to studies. Go back up to studies, the studies tab.
Let me cancel that. Okay, studies.
And then remove all studies. So if you want to clear your chart from all of your indicators.
It's going to throw away my volatility, though.
Look at the broad range. And we focused on this in the daily email and the chart of the day. Look at the broad range over the last 2 weeks. Zoom in on a shorter time frame, and we see that broad range between about 2,800, 2,810, and about 2,940. The range is broad, but this is classic trade war. You know, I've been saying this week, this last couple weeks reminds me of March of 2018. Go look, and we saw almost a exact same thing, about 1,000-point range where price violently traded back and forth between a support and a resistance area. And that is exactly what has been happening the last couple of weeks.
Yeah.
So if you don't learn from history, you're doomed to repeat its mistakes. And I'm sure some of those individuals out there, once again, this is a weird market situation, but those resistance and support levels, the good old-fashioned technical analysis, were tested on both sides this week.
Thought they were.
And price continues to trade within the range. Now, it crazily trades within the range, just like it did in March of 2018, but that's what's occurring right now. That's what's occurring. So it is really hard on any given news day. So Wednesday comes out and we have an inverted yield curve. You know, another day comes out and the yuan is doing this or that or that. It's all on any given day can be very news driven. But at the end of the day, where are we right now? We're in the middle of the range.
We're neutral. We're not doing anything.
In the middle of that short-term range that is developed. It can be, and once again, anyone that's heard me say this knows what I'm about to say too. It's tough on directional traders. These market conditions, March 2018 was really tough on directional traders. The last couple of weeks have been very tough on directional traders. But individuals that understand what is happening from a big picture and understand the volatility that's occurring, can manage trades, do cash flow spreads, do a lot, day trade the heck out of it. Day traders have cleaned up in the trade war. I mean, just look at the last 2 weeks. Let's highlight that price action again. This has been insanely easy trading conditions for day traders.
Mm-hmm.
Day traders have cleaned up in these market conditions. Traders using the same signals that you might be using, just with a really short time frame. Go look at a 30-minute chart today. One of my very simple, there's a lot of different day trading things you can do. But
I don't know, 30 minutes. Oh, yeah, right there.
Is playing candlesticks off the first 30 minutes. Playing breaks of resistance off the first 30 minutes. We've seen this happen a lot, but look what happened on Thursday. Look what happened yesterday. Double bottom occurred. Support held, which lined up with the larger support. These simple patterns, these simple signals on larger time frames, on smaller time frames, day traders are cleaning up because they don't care if they're going short or long. They're right in the momentum on any given day. And so it might be tough for you who does, well, I like to swing trade. I like to directionally trade. Well, that's nice. That's not what is the market giving you right now?
If you like to swing trade and you like to directionally trade, this is not that market right now. And you do not have to trade in every market. There's the old saying, time to go bullish, time to go bearish, time to go fishing. If you were trying to be directional this week, no, you should have been fishing. You should have been golfing. You should have been watching the market but doing nothing. So everyone's heard me talk about how much I love Forex. Ask how many Forex trades I made this week. Goose egg, 0. I haven't made a single Forex trade this week because everything's neutral. Everything's crazy. I don't see anything directional that's giving me a signal to take a directional trade. I have triggers set up if the directional trade were to trigger outside of these ranges, but it's not there.
Directional traders enjoy more good environments than they do bad environments. These are the exception to the rule. Most of the time you have nice, steady trends, easily identifiable, up, down. Trade war is crazy. Cash flow traders have done very well in trade war conditions. The first 2 iterations, number 3, looking about the same. Individuals that respect support and resistance in these ranges have done very well, and day traders do very well. Know the market condition. What is the market giving you? And Gino, how's your hippie ass California tree hugging doing this morning?
You forgot tax paying.
You guys do have some ridiculous taxes out there.
Parade running.
Boy, but that weather, sometimes whenever I visit California, I'm like, is it worth all these taxes? Because this is really nice today.
Yeah, I'll tell you, man, we pay more tax. We love paying taxes. Somebody has to take
a hobby for you guys.
Somebody has to take care of all those national parks in Utah. So,
oh, jab right back.
You're calling welfare? Are you calling Utah the welfare state? Is that what you're saying?
No. I'll tell you what, though. I've been to Utah and it is beautiful. It's my second favorite, most beautiful state, man. You guys got some beautiful country there, from mountain climbing, backpacking, fishing, you name it. No, I take that back. It's number 3. Hawaii second.
So, there's my soapbox trade war speech I have given in the last year and a half about 25, 30 times publicly. I get on my soapbox. Gino, what are you doing?
Well, that's the big question is, I love this kind of market. I love the VIX around 18. That's the average. It's at the average. That's the average.
Tell people why you do. Tell people why you do.
Because here's a fact. I don't know the exact details of the fact, but here's the fact. If you go to the CBOE website and talk about the option exchange and the option clearinghouse, more options expire worthless than expire in the money. What does that mean? Out of all the options listed on all the stocks, most of them end up out of the money, expiring worthless. And the ones in the money, especially the first few in the money, they might be in the money and have a little bit of value built into them, but all their time value is gone. So guess what? more money's lost on time value of options than money that's gained, which means what? Sellers of options make the most money. And who sells the most options? The company that makes options, the option insurance industry. Notice they said option insurance industry because it is an insurance product. They would be out of business if they didn't sell it and make money on it. It's an insurance product. So, like you said, it's a seller's market, not a directional players. It's a seller's market. Here's a news flash. It is always a seller's market in the poorhouse here. It's always a seller's market. I don't care if I got a great directional trade with 100 long calls on it. Guess what? I'm selling 200 calls against it and 200 naked puts. That's how it works here. I'm always positive. Theta, why? Because I can guess, Mark, pretty accurately where the market's going, almost 100% accurately. Almost. I can't guarantee it because I'd get in trouble by legal. But I can guarantee it. Almost. So like 96% of the time I'm right. The other 10% doesn't matter. Okay.
You know, I want to say that to some woman I date. I am 96% sure that I like you. Maybe 100%, but maybe 97%.
Yeah. So there's a chance that I don't like you, right? So here's the thing.
There's a chance.
Oh, I like that setup on Lamb Research. Let me write that down real quick. Anyway, here's the thing, Mark. What I'm saying is this: stock market, especially the option market, it closes. So I can guess where the market's going tomorrow. Period. It's going nowhere. It closes. Your investments are only moving when the market's open, and it could go up, down, or sideways, right? So most 401ks, IRAs, the market's only open 270 days a year, and 1/3 of the time it's going up, maybe 40%, if that. So what a horrible investment it is to be directional, because only 40% of the time you're going to be right, if that, if you're lucky. But 100% of the time, almost 100% of the time, I can't say 100, options are losing value. So hedge fund managers, what do? They're selling options, hedging. Time is predictable. Time only moves one direction, except for that 1 hour we set it back here in California in daylight savings, and that's about it. Even when
time only moves one direction that we know of. You know, there are some advanced time theory that we could spend hours discussing.
Maybe, you know, maybe when I don't know. I just seem to keep getting older.
If time only moves one direction, how did it begin?
Man created it. Man created the clock. Man created options.
Friday physics.
They only go in one direction. And
doesn't time have to loop in some way?
A loop. I mean, if we go
there's
to
plenty of theories that say that it's looped or pretzeled or plenty of things like that, to where any event could possibly affect another event, but it's not necessarily like in the movies where it's like, oh, if I go back in time and step on a butterfly, everything changes. That it's just kind of a layered notebook of paper.
If you go back in time, you would have bet on the Cubs a couple years back, right? That'd been a killer one. Or was it the Ducks? When the Ducks took the Stanley Cup, that would have been, or was that 350-1? So anyway, the only thing that offsets time decay is implied volatility. So when I see the VIX shoot up, and I know time's in my favor, I'm a big seller of options. Always, always. I wouldn't be a trader if I couldn't sell options. I'm dead honest. I could not trade without selling options. I already sold a couple dozen this morning on oil, whatever stocks we were looking at, Tilray, a few others. Sold some calls and puts on everything, just because that's my base pay right there. I got to sell so many options a day. So I'm
selling options is amazing.
It is. Well, here it is.
It really is.
Stock, options, futures, Forex, commodities, bonds. They all can be played directionally, but only one, well, possibly two, can be played with time. Options, the selling of options is what makes it unique from every other product. You can sell them and play time and volatility. The only other way to play time and passive cash flow in the financial markets is yield. And that's your dividends. That's the only way. And honestly, you have to have a pretty big account to make a living off of bonds, yield, and dividends. So until you get there, you have to have some other form of either directional or really good passive income. And there's really good returns on selling options. Now, that should motivate you enough to learn how to trade options, is being a seller. Just a covered call straight out of the gate puts you above the rest of the world just by understanding a covered call.
Let's take a moment then for Fun Day Friday. Let's teach some option strategies. What do you want to teach when it comes to selling options? Something simple. Gino, I'll drive. You can take over.
The market's pulled back. What's your favorite stock? If you're going to build a portfolio as an investor long term, because here's the thing, you have to still have an investor mindset before you become a trader. You have to still understand, okay, what's a good company fundamentally? What do I want to build? Most people work 9 to 5. They can't come in here and manage their portfolios. So what do most people have? 401k, mutual funds, IRAs. So they already have stocks in place. You know what's funny? There's so many millionaires out there, Mark, and people that could retire right now that don't even know it. Why? Because, well, right here in California, I know so many people that could retire today. How? By selling their $1 million home that they're struggling to make payments with and going to work and working 2 jobs and carpooling because they can barely afford a gas. They can sell their $1.5 million home, which is a 2-bedroom home with 1 bath, right? In California and right next to the freeway. And they can live in Thailand or Bali or India and be retired because they have no bills. They cash in. Oh, actually, the outskirts of, what is that? Where do you live, Mark? Huntington? What is that? Emory County? Shoot.
That's where I grew up.
You could buy a freaking block out there for $1.5 million, right?
Yeah, sell your house for $1.5 million.
He just sold in Utah, calling it a welfare state, and now he's saying where I grew up is a third world country. You know, listen, you're lucky you got Nevada between you and me right now.
So anyway,
you know, but honestly, it doesn't even have to necessarily be Thailand or something.
Many students I have. Now, we get a lot of students through Legacy and companies like that because why? They want to learn how to trade. The people that are most interested in trading are people that have saved their money, that have money to invest. It's not the people that have, 1,000 to 5,000. The guys that really take it seriously are the guys that have 401ks. So I run into a lot of people and I have a lot of students that go, you know what? I got this $400,000 401k or what do they call it? 401k from work or an IRA, or they've got a self-directed traditional IRA. Anyway, and I'm looking at it, I'm like, well, I'll give you an example. I have a student, he goes, yeah, I've got 10,000 shares of this aerospace company I work for, or an oil company I work for, aerospace, and all these companies, because they get them on stock sharing plans and they get the shares free. And I'm like, wow. And they're worried about, how do I manage it? What else can I add? How do I diversify? We were talking about this yesterday. There's people that went bankrupt in Exxon Mobil because why? They're buying the company shares and told to buy more. Here's the sad thing. That's the only thing they had in their portfolio. That hundreds of thousands of dollars of that one company. They did not diversify.
Gino, I like doing the halftime report because my best personality comes out when I'm doing color commentary. It's like you're the play-by-play guy, and I'm doing color commentary when appropriate. And I love your play-by-play. I mean, Gino, if you don't know out there, Gino has a ton of experience.
Too much.
And, all of us have been doing this a long time, but Gino's been doing it longer than any of us at Tackle Trading. Not too much. It's a great time. Like, you enjoy trading.
Yeah.
We enjoy trading.
Yeah, and it's hard for me to try to teach and try not to get too advanced, but then try to get, I love the psychology, is this. I've sat, and this is the best feeling as an instructor. I'm sitting in my office and a guy goes, yeah, I got a $500,000 and most of my stuff's in Boeing, for example. What do I do with it? Or Schlumberger, now that it's pulled back. And I'm like, have you sold calls against that? And they go, what is that? And I just go, yes. Why? And then I go, well, if you sell these calls way out of the money, it brings in cash flow every month. And it's guaranteed that money's, once you sell the call, it's yours. The money's yours. If the stock goes up, they take away the stock. You make a gain on the stock too, and you can always buy it back, whatever. So the money's yours. You don't have to buy the call back. It's yours when you push that button. And they go, oh, so what you're saying is I can make 8 to 10 grand a month just by selling these calls against a portfolio they already have.
Yep.
And they didn't know it.
Sell that house in California, move to a state where it's cheaper to live, cost of living's lower. Take that $1 million in cash for the rest of your life, retire tomorrow.
Yeah. And then what's funny is I see their heads spinning. They go, wait a minute. They think about the strategy. They're not sure if it's true what I said. And they always come back with this. I can actually retire, but they don't want to get out of the 401k because of the penalties, right? But some of them are like, hey, it's only 10% penalty that you pay back to yourself. And I'm like, so why don't you work just long enough to make that 10% penalty and then practice this strategy, watch it get confidence. And then now the light on the end of the tunnel just got brighter. And they just go, wow. It's so cool because now there's hope. Their whole life changes when they realize, oh my God, I've got this stream of income I did not know about. And it's good for them because they've been saving their money. They only think they can play the market one way, up. And society's got them believing, hey, listen, you build a 401k, you go to college. No, you can go to college first, right? Drain your parents' account, go to college, build a 401k, and stay working because you're going to need that money to one day when your house is paid off to pay for your kids to go to college. And you're going to need to have value in your house because when you get to the retirement home, they're going to borrow against your house. You got to trade your house in for that retirement home check because it's expensive. And, you're like, okay. And then what's happening? They get 50, 55, the economy gets scary, and all of a sudden they're afraid to lose their job because of job security is everything. And job security, doing something they don't want, is such a stressful way to live because you're doing things because if you have kids, you feel pressured, you have to keep that job. And if you have a house payment and bills, you have to keep that job. It's all about job security. That's not freedom. That's called slavery. And then what happens is this, Mark, when I say, oh, by the way, you've done good. You've done the American way. Good for you. You've walked the fine line. And did you know every month you could be bringing in X amount to pay your bills? And they go, oh, F job security. I'm free. F is for freedom.
I mean, and that's what it's all about. And I mean, and that goes to the core teachings of Robert Kiyosaki on cash flow, on financial freedom. When we have more money coming in than we have bills to pay, what are we? We're free.
But and that's the thing is, it's some people are like, I like my job, but here's the thing: keep your job. I've got so many hobbies, and I get offered jobs in different businesses. You guys know I'm a big coffee roaster, right? And when I won the competition, when I took second in a major competition this year, I got phone calls from coffee companies and hey, you want to roast for me? You want to cook for me? Do you want to do my farmer's market? Do you want to do this? Nah, don't need to. I can make that decision. Don't need to. Really? No, unless you're, going to replace my income I do as a trader. Nah, I'm going to go find a different hobby. Now I'm going to start making homemade pasta, Mark. Now my hobby is homemade pasta. So it's doing what you want in life, building sandcastles, feeding the dog, whatever. You start making changes differently. I'll actually hang out the mall longer. Why? There's no rush for me to go to bed. It's time. I don't wear a watch. Why? Because I know when the market's open, it's in the morning. I can manage it after. I don't wear a watch. Why? Time, slavery. Why do I need a watch? That's why I'm late to everywhere. It's one of those things where you think differently because you're not a slave. People are talking about, the slave thing and racial things, and we were slaves and held. Oh, you know what? Everybody is with a job. Everybody is with a job. You are a slave to job security. Once you see light at the end of the tunnel and you get confidence, and that's why I like trading, because I just get more motivated every time I wake up and go, I'm in control. And as long as I'm in control, nobody tells me what to do. And I get to enjoy what I want to do. And that's why I do like the market closing at 1:00 in California. I have a bunch of time to do whatever I want, right? It's sunny here. I go to the beach, do whatever I want. It's just the freedom. But bottom line is this: selling options gives you that extra stream of cash flow, period. That's what it's about. You don't have to make so many hard decisions. Find a handful of ETFs you like and sell options against them. Sell puts until they give them to you. And if they give them to you and assign you, sell calls until they take it away. If you pick 3 or 4 of those, and that's usually where I start with my family and friends, I say, okay, let's pick some big sectors. Sell puts at the annual low. And if you get assigned, and they're like, well, it's only 30, 40 bucks a month. Hey, extra stream of income. And then you start getting motivated to build that account up. It took my mom over 15 years to start building, after I started teaching, for her to start building her account up. My mom started her account, ready for this, Guess at what age? 66
68.
years old.
Oh, 2 years off.
66 years old, she started thinking about, I should probably start investing. Guess what she said to me just a few days ago? Man, I really wish I knew about this about 66 years ago.
That's the thing. I mean, retail options, I don't care if you start when you're 32 or 45 or 66. You're like, I wish I had this knowledge earlier. But hey, we got where we are.
I know.
We are where we are.
So is it a pain in the ass to learn options? It's a pain in the ass to learn options. It is. It's tough for some people, especially if you're not good at math. But here's the deal. To me, it seems easier than real estate. You have to either find real estate, options, or some form of passive.
It takes how long to find a good deal in real estate? And you can't even do it online these days. You have to manually send out letters and wait for people to call you. And how hard is it to find a good stock setup? Minutes, seconds.
And there's companies like ours, Tackle Trading, where we have the Tackle 25 for great cash flow investments where you can pick your own portfolio. You could go through 25, you could pick 3 or 4 or 5 or 10 that you want to dabble in, and do covered calls. We've already screened them for good cash flow returns. We've got the Tackle ETF in there. So yeah, if you don't want to learn and you're busy, because that's the true problem, Mark, is I was at the soccer field last night until wee hours of night because it's summer and we're playing a tournament, and the parents are looking at their watches and they're like, oh God, I got to get to bed. Oh my God, I got to get to bed. I'm like, why? I got to get up at 5. I got to get up at 6. I'm like, why? You trade the markets? They go, no, I'm in aerospace. No, I got to drive here. I got to do it. They're so stressed out and they're just there because they're kids. And they go, what do you do? And I'm like, oh, I trade the markets. I invest. They go, oh, I want to learn that. And I'm like, you don't have time. You don't have time. It's sad. They don't have time. They don't have time. They're busy. They're running around club soccer 3 different ways. One parent's got the kid over here. The other parent has the kid over here. They're getting hotels in different areas. They're running the kids. They're trying to keep the bids busy. They're too busy to stop and learn. And that's sad. So guess what they do? They rely on the 401k and the markets. And you got to free up time for the education. You got to free up time or free up enough time to follow a website like ours. That's the next best thing. I mean, if you can't do it yourself, at least follow a website like ours and go at your own pace, but do something. But if you don't have time, you're going to be forced to give your money to a third party, which I don't know. I've never had good luck with it. I don't know. Very few people have a lot of luck with a third party stockbroker, financial planner, mutual fund manager. 401k is about the best you got, especially a Roth IRA is good because you always borrow the money, invest. But 401k, because the company matches you and the tax breaks. And if you retire on an upswing of the economy, but that's about it. So you got to free up time. That is your investment time. That's your first investment. And health, so you can have a lot of time to enjoy and then free up time to learn education and financial. So I when it comes to people say, God, he's all dwelling on money in the markets. No, I know I value time first. My time's more important.
I mean, that's all money is. I mean, what's funny is, Gino, you and I are not very materialistic.
Right. Not at all.
I joke about you being a hippie, but I have huge hippie tendencies.
Oh, me too. Me too.
I mean, it is about lifestyle. Is it about freedom? Money's a tool. That's all money is. It is a vehicle. Now, hey, and if you love money and want all the nice things, I got no problem with that at all. Because hey, each our own, to each our own. But whatever our objective is, whether it is financial freedom or just lifestyle, or we want a new 7 Series BMW, whatever it is, money's a tool. Money is a tool, and it is plus this is fun.
Yeah.
I enjoy, the markets, even when they're crazy like this.
It really is. It really is. If I had to take it over, I just wish there was electives. I was doing my back to school electives for my daughter, and they have a money class called Smart Money, and it's great. The schools are finally introducing it. I wish they had that when I was in school. But where's the real estate class? Where's the portfolio building? There's some areas, like there's a place, where is it? Indiana or something, one of the high schools had an elective where they built portfolios in stock investing and fundamentals because the teacher proposed it. And I'm like, oh, that's so cool. And it was on CNBC. Mm-hmm. Where is that? Where is that? Because It's almost like the system doesn't want you to be a real estate
Oh,
agent.
that's absolutely. It absolutely doesn't. Think
But
like.
I'll tell you what,
Cool. I don't
I
get
run into some very rich, very low educated, I just know, very rich real estate agents. Because why? You sell a house in my neighborhood, you sell a house, the average house is 1.8 million. And you get, what's the percent on that? If you split it with a broker or whatever, they sell 1 or 2 a year. They're making double the average income. Just selling 1 or 2.
It's crazy that they.
And you got these single parents doing it as a part-time job, showing houses and stuff. And I'm like, how much did you spend on that class? Well, it was actually free training and you split it with the broker. And I'm like, and how much are you making versus your college education? And they're like, that's what's sick.
Yeah.
So really, I'm like, wow. But anyway, freeing up time, education, selling options. Do you guys have a go-to stock that you always look at every day?
Oh yeah.
Yeah.
And how many?
I'm always looking at ExxonMobil. Lately, I look at Match.com. That's been a new addition in 2019.
Right.
I always. What are some others? I mean, because it's my job, as part of my job is an analyst, I always look at the big ones: Facebook, Netflix, Apple, the ones that people have a lot of interest in. AMD, of course, I look at every day because it is required by law at Tackle Trading to look at AMD.
Know what's going on with AMD.
Like it is by law, you are required to know what is going on AMD at Tackle Trading. It is the most popular stock by members at Tackle Trading, and there isn't a close second. So it is required as my job description to look at AMD every day.
I hear you.
I mean, but I look at all commodities. I mean, commodities are my passion in everything. When I started the lounge back in November of 2017, I mean, one of the first things I said is like, listen, I'm gonna catch up to speed with equities because I've been, all I've been doing is looking at commodity charts for the last 2 years. So if I didn't communicate with students, if I didn't have to be informed, I probably would only look at commodities because that's where my real passion is. And that's where I think I'm my best.
And here's the thing, Mark, like you said, is my go-to, ready for this? Crude oil.
Yeah,
crude oil, if you do covered calls on crude oil and naked puts on crude oil futures is so much better than covered calls and naked puts on USO. The return on investment is way better. The liquidity, it's in one of the number one traded commodities, gold and oil. I don't know if I could go a few days without trying to find a trade on it, right? I mean,
there's always something to do on crude oil.
Yeah, and I'll tell you, and that's why people say, God, the oil guys are millionaires. Yeah, because it's a commodity that they know that and that only. And I'll tell you, that's one of my go-tos, commodities. I was talking to Keith King, one of our coaches, and he's been trading 34 years. He goes, people love me as a futures and day trader, and everybody thinks I'm a Forex expert. Because Gino, can I tell you where I make my money? I'm like, yeah. He said,
please.
Yeah, he's like, I look for commodities that are beaten down and I sell puts on them. And sometimes I straight up just do a covered call on them.
Hey, and there is someone with more experience than all of us. If you've been reading my commodity report on the boomerang trade the last couple months, I mean, that's the reason is sometimes trading's stressful. I find it's less stressful with commodities.
Totally. Because they're not going to go bankrupt.
I mean, and that is what it is that if Intel goes down and I'm like, oh, I like this and I like this support and I might love the thing, and I might feel really good. I will never feel as good on a stock trade where I'm looking to acquire it cheap as I do with a commodity.
Right.
Never. It doesn't matter. There is no situation.
The only commodity I hate right now is coffee and natural gas. Because natural gas, me and Matt were talking, is this going to be the first natural gas, the NG? Is this going to be the first commodity that goes bankrupt?
No. No, and we talked about early signs of a reversal this past week in the commodities report. The early signs of a reversal. In fact, I was going to write a boomerang series, part 9 in the boomerang series. This week in the commodities report, I'm just going to lay out why I love commodities. I want to do a passionate report on why I love, because there you're talking about Keith King, and there you're talking about how you love crude oil, and how I love commodities are amazing.
They really are.
The Warren Buffett disciples would say, well, they don't pay a dividend. You create your own dividend.
Yeah.
You sell those calls against them, sell puts against them. It's like
you create your own dividend.
The margins are so much better.
And the ROI is so much better too, especially if you have portfolio margin.
And the strike price, the strike. Oh yeah, portfolio margin. It's almost okay. So you have cash to cash, which is 1-to-1. Your cash retirement account margin. Your basic margin in the U.S. is the 2-to-1. So you buy a $2 stock for $1. Then you have portfolio margin 7-to-1. Futures is between 2-to-1 and 7-to-1 mostly. It's the way they calculate it. And so you have better than 2-to-1 margin. So knowing how to leverage it. But here's the thing is understanding the maintenance fees and all stuff is a little learning curve, but there's not that many you have to look at, kind of like the Forex market. But also they don't go bankrupt, no earnings reports. They do have news reports, but the strike prices on options on futures, like oil, for instance, they're 50-cent strike prices, increments. You can do spreads in there for $10 on oil.
Listen, there are so many things to do. And I mean, and you don't have to answer this in chat, but how many times do you feel overwhelmed with trading because there's too many stocks to follow or this or that?
Yeah.
Commodities you don't have that problem with commodities. You only got a half a dozen or so.
Yeah.
You really need to follow copper, follow gold, follow silver, follow oil, follow natural gas. And then if you want, you can follow platinum or palladium or coffee or soybean, whatever else you want that might be a passion. But you got a small universe. And if you're the type of individual that likes to trade in the middle of the night, hey, crude oil can move at 1 a.m. when the European market's open.
Yeah. So what percent of your account is cash flow? What percent is directional?
Well, I mean, that's going to vary on market conditions. Obviously, when the trade war kicks in, that percentage jumps up. I always try to set, and this is one of the things I tell people. I'm like, are you ever going to have all of your money out in directional trading in your account? Like, that seems lunacy to me.
Yeah.
And so, like, there's always going to be some money set aside for directional trading for me, but I'm going to have a lot of money percentage-wise that's available. Just screaming cash flow. Do something.
Yeah, that's a big thing. Like, so what percent you keep cash? What percent? That's your own personal allocation. But I do have a certain percent I always go directional with, and I do have a big chunk that's always cash flow. And then another chunk I do nothing with. But yeah, I'm always, even when the VIX is low, always looking for that what do you call it?
Premium.
Yeah, I'm looking for premium. That's why I hate when the VIX is low. So right now I'm loving it. And I'm trying to get my thinkorswim to work. There we go. So yeah, I'm trying to always look. So you have your go-to stocks that you're always like, okay. For example, one of mine is AT&T. I know where I'm selling that put anytime it gets over 20 cents premium, 30 cents premium. I know where I'm buying the stock when it gets to almost a 7% dividend. Figure that out on the chart, 7% comes down below 30 there. But when it dips down, and I know I'm start selling it and selling more calls against it when it gets above 35, which it's almost at. So there's certain go-tos you get. And that's what's great is when you have boring systems, like let's say you have a dozen stocks that, it's doing this, I do this. It does this, I do this. Where it's so boring just to wake up and do it, it's called consistency.
So we actually, the other day, and in the lounge, I popped in and Noah was there, and there was a student. For the life of me, can't remember his name. He's out of California, and he was like, "Hey guys, I got a question." And on the lounge, we let our students share their screens so we can directly help them with their portfolio. And his question wasn't anything other than he was like, "I have all these trades on, and some students can do a lot of trades, some students can't." And he had probably 60, 70 different trades on it. It was a lot. But he was like, all I'm doing is if they're doing well, I leave them on until they hit targets, and then I take it off. And if they do bad, I close it. He was like, am I missing something? Like he was getting bored because it seemed too easy. And he's like, this seems too good to be true because I just simply close out of the losing positions and hold the winning ones. And I'm just making money. Like he was
No,
like
it's
almost
not.
confused.
I love that. That is a great story,
That is
actually.
awesome. That is awesome. And,
I didn't figure out who it was. And if you're here, please let me know. Remind me. Because, yeah, this was like 4 days ago. And it was like, no, you're doing perfect. You are following your rules. And, yeah, the money just flows in.
now, does anybody in the audience have a stock or system you trade that it's so consistent, it's boring? And what's funny, Mark, is I'll see people going, well, I do this and I do this, I make money. And I'm like, okay, then why are we talking about this losing one you're trying to fix on Google or Tesla? What's this one you do over here that made money? So if you go to somebody's account, you look at their best trades, I always say, wow, that was a pretty good trade. I noticed that you got a pretty good, decent. If you go to at the end of the year, I love doing this. On Thinkorswim or any broker, you could go to your history on your trades, like your portfolio. It'll show you what stocks you made money and lost money on. Look at your top 10 or your top winners. Sometimes they're not your favorite trades, but like I noticed, I was like, God, on Cisco, it's always my top 10 every year. Why? For some reason, the strategy I was doing or the system I was using, that stock worked good. And I said, I better start paying more attention to that. It wasn't my favorite to trade. I kept trying to make money on Electronic Arts and Chipotle because they're in the news, and Apple. But I noticed my top 10.
Force the trades based on the news. That never.
Yeah. So you're like, I feel like I'm missing out because those are big names. I should be trading. They're good setups. But honestly, where are those ones that you're like, you know what? I do pretty good on those guys. They're not my favorite. Like I had a college company. It was called Coco one time. That thing was so, I'm like, I don't even know what Corinthian College does. And it was just boring. I was like, oh, but you know what? It's not about being excited and missing out. It was about making money. So I look back at the ones that were consistent and boring. And a lot of people throw those out. They go, yeah, I did this one and it made me money. I did this covered call. It's those consistent, boring trades that actually build your confidence when you just can throw them on there. So if you have one, Cheryl.
Stay bored.
And you know what? Guess what?
Stay
You know
bored.
who does that? You know who's really popular who does that with boring stocks?
Who's that?
Warren Buffett.
Oh, yeah.
He does some boring ass stocks. Think about his top holdings: Coca-Cola, Bank of America. Really? I don't even want to pull up the charts just thinking of it.
Well, Coca-Cola is actually pushing up against.
Oh, yeah. There he goes, billionaire. He's only a multi-billionaire. Coca-Cola. What's the other one he has? Berkshire Hathaway.
Or is it Union Pacific?
Union Pacific.
He has Apple.
They're not even in the news, man. You know, Bank of America. Why would I want to go trade Bank of America?
J&J, how's J&J doing? I've been waiting for this thing. It looked like it was going to break out and have this reversal, but it got beat up really bad. I'm still waiting for this thing. If I can get a closed breakout pullback towards 135, I'm going to be
Naked puts at 110.
I'm going to be I can do that too.
Yeah. It just, and believe it or not, a lot of those boring stocks are in your S&P 100. Yeah. So the S&P 100 might go to, and they're liquid. They have options. Most of them have penny options. They have weeklies. You can find a lot of boring stocks in the S&P 100. They're in the S&P 100 on purpose because of the top 100 companies, and they usually outperform. But there's always somebody in there I could sell puts on and build a portfolio from. In fact, I realized that when I was trading big, large accounts for a company, and we had to do a lot of contracts. The default was 25 contracts. The default on buying the stock was like 2,000 or 3,000 shares. There was no 100. And here's the thing. You start getting partial filled on unpopular companies, it sucks. When you get partial fills, you don't want to trade them.
No, yeah, I hate partial fills. It's like,
so if you go to S&P 100 or the Dow 30 or the NASDAQ 100 or even the NASDAQ 50, they're very liquid, a lot of options traded, very high volume stocks. You don't get as much partial filled. And that's where you start thinking, you know what? I wonder where the big money goes right there, the big volume stocks. And like some people have screeners. What is your screener set up for? Stocks over 500,000?
It depends on what I'm looking at.
Most schools will say 500,
yeah,
700.
I have a certain amount of volume. I would have to go back and look at it.
That's okay if you're trading 1 to 10 contracts. But honestly, if you want to avoid the partial fill nightmare, that partial fill is when you put an order in and you want a certain price, let's say 55 cents, and they're not giving it to you. You get a few contracts.
I always keep it on the large cap.
Large cap. If you go S&P 100,
that probably keeps it above, way above 500,000.
Right. So, yeah, so you start realizing to get away from the partial fill nightmare, which can drain you and really mess up your whole day, because you can sit there and cancel, replace your orders all day and try.
Well, we haven't done too much talking directly about the market, but we have had a fantastic conversation about actual mindset in the market.
Oh, the lounge, we went deep in the markets.
I mean, what the hell are we going to talk about today? It's in the middle of the range.
I don't know. I was about to say, like, we covered a fantastic topic.
Why don't we do this? The market, we are still negative 40 on the bull bear. Most of the sectors are bearish. We broke it down. Do you guys want to hammer through our stock and options report to see how we did? Because we did phenomenal this week.
Yeah.
Gino, we got 10 minutes left. You do. I mean, we should be closing up right now.
Okay.
We got 5 minutes left.
Do you want to do rapid fire instead?
Gino, it is Fun Friday. You decide.
What would the audience want to do?
We haven't talked some stocks. Why don't we? Yeah, let's let our students pick some stocks first to analyze real quick.
You got it.
All right, go ahead. Hammer in there, guys. What do we have? I see PLZ. I don't know if that's you saying please or if that's a ticker symbol. That's definitely not something that's you just saying please. What symbols do we have as we wait? Do you know what symbol do you have to look at?
Oh, what do you guys think of AMD? We were talking about AMD. What do you think? We even think about going bearish on that?
Nah, I'll sell some puts on this thing. And I mean, these two lines I drew are the exact range where I need to keep an eye out. If it breaks below $28, then I'll look to go bearish. But until it either breaks 34 to the upside or 28 to the downside, I'm neutral on AMD.
I mean, here's the thing about AMD. It's relatively strong compared to the market. Like if you look at the price action over the last couple of weeks, it's stronger than the market itself. So right. I just think you can find better candidates to go bearish on.
What do you think of Yum Brands? Why UM?
YUM, Yum.
I think I had Taco Bell yesterday is what I think of Yum Brands. I contributed to their growing empire. And I want my nacho fries. I wanted nacho fries, and I felt like I got McRibbed because I went to Taco Bell because I was craving nacho fries, which are absolutely delicious.
They are the ones they put the Dorito nacho seasoning on. Oh,
and you dip them in the cheese sauce. Those things are delicious. And
they really are.
And I felt like I got McRibbed. What is it with these damn fast food companies teasing you with this deliciousness and then pulling it back?
Yeah.
Wait, it's no longer there. I'm not gonna go check today and see if they still have it.
There were no nacho fries available at the Taco Bell I went to.
They even called them they did like an extension on top of that called rattlesnake fries, where they added some meat jalapenos on top of that. If you have not
tried nacho fries, you need to try them. They are absolutely delicious.
All right, we're promoting some Yum Brand. All right, we do
every minute you've ever spent at tackle trading just to hear about nacho fries if you've never heard of them. They are delicious.
All right, we're going to start with Kimberly Clark, which Kimberly Clark looks like it's having a little bit of a breakout right here. The break above 140, and it can definitely play to the upside. I'd be looking for some target right there where I have that line.
Wow, look at that nice break.
Yeah, that's a good break. So if you're a first break type trader, look to play that. 145 is easy, 150s after that. Next in the symbols, I see, actually I skipped one, HRL. Gino, why don't you go ahead and take HRL?
Oh, Hormel Foods. That's just downright neutral. But is that earnings coming up in a few days?
That is earnings coming up in a few days.
Yeah, that's and on the earnings, does it move big? Let me see. Kind of. Yeah, I can't guess a direction on that. So that's one of those.
It's trading right in the middle of a 3-month range.
Yeah, that's tough. That's tough.
All right. That's them saying there's nothing there to see.
Nothing there.
ABBV for Mark.
Classic downtrend. Boy, that 9 EMA, my girlfriend, my favorite indicator, boy, that has sure slapped it down for the last month, hasn't it?
Yes, it has.
Powerful momentum indicator. Every time it's came up, there's a lot of weakness here. Every time it's came up, it's had a little nice run, but obviously breaks of support are where you want to go.
All right, GLD gold. I'll pass that one back to Gino as he was just saying how much.
That is bullish. Wait for a nice pullback to support. I don't think it's pulled back enough for me here. And this is one of our most bullish things out there, gold, and it is outpacing silver. So yeah, wait for a good setup though.
Awesome. VMC. Yeah, never just buy just because it's going up. Now, if you want to try to play a momentum play, you can. But momentum plays aren't necessarily beginner level stuff. Like wait for a pullback, wait for something easy because momentum can bite you. Going on to VMC, I will take this one. I see this that it has broken out. Call it the 140 mark, where But if you notice, all right, come on, draw a line. Okay, if you notice, it's tried multiple times to break out of here, but because it keeps having these wicks to the upside. That's just going to say we need a close up here. Because if we, in the next 2 hours, this thing rips back down and closes down below, that's not a breakout. So even though it's right here looking like a very strong breakout, because it has so many wicks where it's tested and failed, I'd wait for the close today and then look for above the close on Monday rather than trying to play the first break. Moving on to, where am I at? NEE, Mark.
All right, what we got here?
Nextra Energy.
Boy, these defensive utilities have just been on fire all year long. Now, those people trying to swing trade utilities and REITs this year, I have hated swing trading techniques on utilities and REITs because price action is a little different than everything else. Position trading these things has been money, has been absolutely money. Sometimes pullbacks are a little bit deeper on utilities and REITs. Sometimes breakouts are not as clean, but I don't like swing trading these stocks, but I love position trading them. Looking at a little bit deeper pullbacks, a little bit looser stop, giving yourself a little bit more leeway and break. But these defensive sectors have been killing it all year long. I'm not going to be the one that tries to guess when they stop.
All right, we got about 10 stocks, guys. I'm going to shut it down. Nothing after.
What about NVIDIA?
So hang on. We're going to go down the list as quickly as we can, and then we'll get to NVIDIA. All right, Lulu. Lulu, I see this really deep pullback. I don't necessarily see a directional trade here unless either of you guys do.
All I see are the letters ABC. They should just change their, after our conversation yesterday.
All right, yeah, we're not going
their ticker symbol to ABC.
All right, PSA. It's moved quite a bit. Looks like it's getting a little bit of slow momentum. Wait for this thing to kind of continue to high base or maybe give you a pullback. But right now, that 9 keeps pushing things upward. This is that public storage company. Gino talked about this morning in the lounge that it's a REIT without tenants. It's a storage facility.
Yeah, do they pay dividend?
That they do. Next is Schlumberger.
Uh-huh.
Pass that one to you.
Oh, man. Look at that. That oil company really getting cheap, isn't it?
That it is. Do you see a trade here right now, or you want to see?
Wait for the bounce and set up to the swing high. I don't know what's going on. As long as energy is bearish, it will be bearish, and oil prices are low. But man, you got to look at the fundamentals of these energy companies because this thing, if you really want a weekly, it's been up a lot higher. So,
and Schlumberger is an equipment and service company, so they're not an oil producer. I mean, and some of these equipment and service companies in the oil, they can have things that weigh on their stock price outside of oil itself. Like a lot of your oil and producers is just the price of oil for all intents and purposes.
Right.
But there's a lot of other costs and things that can go wrong with a company like SLB, as you've seen. I mean,
could be international.
This stock is a really ugly long-term downtrend if you go to a longer time frame.
All right. Well, I'm not going to because that's too much time on rapid fire. Procter and Gamble has been.
Listen, I reject your rapid fire.
All right. Procter and Gamble gapped up on earnings, got a nice pullback, then moving up to it. If we can get a break above probably 128, unless you're worried about that wick, I can see it Procter & Gamble could be a good play. Safety, defensive. People are going to buy their staples. Next is going to be CRN. CRN, Gino, what do you see here?
Yeah, this thing is bear retracement until it gets above the 20 and gives you a swing low above it. Right now, bearish.
All right. Hedge. Hedge, I'm seeing some reversal characters.
Advisor shares Trust Ranger. What the heck is that?
Not sure. It's an ETF, but I'm starting to see some reversal characteristics here where it broke out. It's above its 200. It'll probably come.
I want to know what this is.
Yeah, I'm not sure what this is. Advisor shares.
Trust Ranger. That's what I want my screen name to be.
Trust Ranger. So this thing could be reversing right now, but I want to see more confirmation of this, the upside.
I just really got to research on stocks under $10.
You just want to buy it. It's Trust Ranger. I just want to buy it now. I don't even know what it does.
Digital Turbine. I mean, it's got a good uptrend. It is a cheap stock, like Gino just said. You know, want to do some research on stocks under $10.
I'll tell you what. If you buy that stock, buy a put to protect it. Anything under $10, you got to buy a put to protect it. I
mean, when you see something that's for years been low and all of a sudden starts taking off like that, that actually gives me caution too. I never expect companies that are consistently under
$2. Play devil's advocate. Micron was at a couple. I mean, there are so many examples of stocks that were really cheap at some point.
Yeah.
Oh, yes.
Then just explode.
But majority. So, you know, let's put this on a bell curve. Yes, you'll have your outliers. But do you really want to be the person trying to pick those one or two companies that are going to explode?
Listen, I know some people. Yeah, I do actually. If I'm looking for some good long-term investments, I don't know anything about this company. So this might be just all smoke and mirrors. You know, I'm talking from an investing point of view. I know of individuals. This is what they do. They find cheap stocks that they believe in, and when they're right, they're huge, massive. Yeah. So I'm talking from an investing point of view, not a short-term trading point of view.
Yeah, so like there's some great penny stocks out there. You just got to find them, and you got to do fundamental analysis.
And listen, there are thousands. I mean, it's like the needle in the haystack. So you got to have a passion.
You got to have a point. It's just the needle in a haystack. Yes, they exist, but more than likely, you're not going to find it just because you heard it.
Oh, if you're only spending 20 minutes a day looking for them, you're not going to find them.
Yeah, no. It would take hours. All right.
You got to research.
CELG. CELG, I see this thing is pretty neutral, not really doing much.
You got to zoom in more. You got to zoom in more.
All right.
There you go. That was a swing low off the moving average there.
That it was, but it's also at a long-term resistance right here at that $95 mark. We need to see that thing.
Trigger has to be a little higher, 96-ish.
Yeah, absolutely. Next is Square. Trying to get us out of here on time. Y'all are trying to fight me on it. Gino, what do you got on the Square?
Dead cat bounce or a trigger below 60.
All right. Mark, what do you have on Halliburton?
Yeah.
Same as Schlumberger. Meh.
Yeah, I mean, these oil equipment and service companies just are terrible right now.
I know.
Like, if you're going to make oil plays at the bottom, do producers. Don't do the equipment companies.
Sounds good. Next is Cron. Cron is on the Dirty Sexy Money list of our covered call strategies. So it is a more difficult play, but as you can see, this line that I have here on my chart at $14, it broke that. And actually back here, I think it was last month, I can't remember which show it was on, I mentioned that when it broke its 200, I exited my trades because I can see this thing now coming down off the 200. I think this thing can go further to the downside. If you want to hold it, roll your calls, continue to roll your calls, maybe sell in the money just to kind of get a little bit more premium as well as protect your position. Other than that, I don't see a directional play right now.
I agree.
So with that, guys, I'm going to send this out, but I got to first say, otherwise Jeff's going to kill me. We did a full analysis over on Instagram, so she wants all of you guys to immediately leave here, go check out the story on Instagram where they did a complete breakdown on Starbucks. I just dropped the link in the chat, so go check that out. From that, we're about to leave here, go get start our scouting report meeting, get some great picks for you guys this weekend. So make sure you check out those reports. Guys, we're out.
Have a good weekend.